I'm not trying to pay a debit transaction to take my money out of my account. It does not make sense to me. Hi everyone, welcome to my channel. My name is Reni. If you're new here, welcome, and if you're a returning subscriber, welcome back. On my channel, I do fashion, finance, and lifestyle content. And if you are new here, please hit that subscribe button, and if you are returning or new, please hit that like button as it really helps me with the algorithm. Today, we're going to be talking about high interest savings accounts. Last year, in about November of last year, I did a video comparing the high interest savings accounts across Canada. I compared all the rates and all the perks of the accounts, and a lot of people really enjoyed that video and resonated with that video. However, since then, rates have really changed. And the ones that were topping last year may not be topping this year. So I wanted to do an updated video and update you on, first of all, what the best ones are now, and also why rates are changing. Because I think a lot of people think, oh, the banks are just being cheap, they keep lowering their rates, blah, 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 blah. But honestly, that's not really the case, so I'm going to explain it in this video. So the first thing we'll go into is, why are rates changing? If I put it simply, an interest rate is the cost of borrowing money. It is what someone is willing to pay in order for you to lend them money. So when I put my money in a bank account, the interest rate is determined based on how much the bank is willing to pay me in order to hold my money there. And the reason that they will pay you at least something is because they're trying to incentivize you to give them your money instead of you putting your money under your mattress, for example, because they can then loan your money out to other people and then make more money off of it. So how is this interest rate actually determined? The Bank of Canada basically sets a rate, and they determine this rate based on a number of economic conditions. So there are conditions such as what the inflation rate is right now, what supply and demand is right now. There are a lot of factors that come into determining this rate. And then the banks will use this rate as a guide on how they will set their interest rate. So it will determine how much they are willing to pay for your money. So I hope that makes sense. I, along with many of you, received emails this past year or notices in the mail or things like that this past year, and the banks are basically saying, yeah, sorry, we're lowering our rates. And again, this is because the Bank of Canada is lowering their rates, so they are lowering their rates to match that. So some people think, oh, why is my bank lowering rates? They're so cheap. But I'm telling you, it's not just your bank, it's happening across the board. However, some banks are better at communicating it than others. Like, I know from one of my banks, they sent me a detailed email. They were very upfront and clear about it, whereas other banks were not so clear. They sent me something in the mail, which most of us throw out anyways. The banks are taking different approaches on how they're going to tell you that your interest rate has been lowered, but your interest rate likely has been lowered, so you should go and check it out if you haven't. With this being said, and interest rates still dropping, I still think that a high interest savings account is the best place to hold your cash. Again, I highly recommend having investments, and I highly recommend like opening a TFSA for your investments. But if you are just holding cash, I think a high interest savings account is one of the best places to hold it. So now that you know that a high interest savings account is a good place to keep your money, let's talk about which one you should actually put your money in. If you watched my video from last year, you know that EQ Bank was one of my favorite banks. I learned about them last year, and I immediately transferred my high interest savings account to them because they offered one of the best rates. And I will say, spoiler alert for this video, EQ Bank is still one of my favorite banks that out of the ones that I listed. But I will go through all of them, and I will compare them across a bunch of categories so that we have an objective view. I do have an affiliate link for EQ Bank, so if you do choose to open an account with EQ Bank, I would appreciate if you did use my code. It really does help my channel grow, and it shows EQ Bank that I am the one sending you there rather than you just searching up on Google and finding it yourself. So I will leave that link in the description box if you are going to open an account with EQ. I would, again, appreciate if you would use my link. All the banks that I mentioned today do have CDIC Insurance, which is essentially an insurance here in Canada that protects your deposits. So any money that you put in the banks up to $100,000 will be protected by this insurance. And what that means is, like, if the bank goes bankrupt, for example, if you're worried about your bank going bankrupt, no worries. If the bank is CDIC insured, your money is safe with them. So if you are choosing to open a bank account, even if it's not one of the ones that I mentioned, you do need to make sure that it has CDIC insurance, because I don't want you to lose your money in any case. Okay, so let's get into the accounts. I will walk you through all of these different accounts, and I'll go and in order from the highest advertised interest rate down to the lowest interest rate. So let's start off with Tangerine Bank. Tangerine Bank's account is called Tangerine Savings Account, and their interest rate is 2.1% for the first 5 months, and then it drops to 0.1%. There's a monthly fee of $0, there's a minimum balance of $0, and there is no listed maximum balance. They also have free e-transfer, so you can send money to anyone for free, but they do have a few rules to get this rate. So some of the rules include you have to become a client online before August 31st, 2021, and you have to use their promo code EARNMORE. Then you have to open a savings account and a checking account within 30 days, and when you do that, you will receive the 2.1% interest on your savings account for the first 5 months. And then the third rule is that you have to add your payroll and have the payroll direct deposit in your checking account within 60 days of opening the account. And you have to keep it going for at least 3 months. And when you do that, they'll give you a $200 bonus after the 3rd month. So what that means is if your paycheck normally goes into another bank, you just have to redirect it and update it and go into your Tangerine account. So as a summary for this account, I would say they do have a great introductory rate. It's actually one of the highest out there in the market right now, but it only lasts for 5 months. So like it's basically like they're trying to get you in the door, and they know that once you've moved your pay stubs there, you've opened a checking account and a savings account, you're likely not to leave after the 5 months. So I think that's the approach that they're taking. And one thing I don't like about this is that there's so many actions to take in order to get this actual promo rate. Like, I don't know, moving my payroll sounds like a lot of work, but you know, to each their own. The next bank I'll go into is Simplii. Simplii is a subsidiary under CIBC. Their account is called the High Interest Savings Account. So their interest rate currently is 1.5% until October 31st, and then it drops down to 0.1%, which is their normal rate. There is a monthly fee of $0, a minimum balance of $0, and a maximum balance of $200,000 that is eligible for this rate. There are free e-transfers with this account, and there are no rules to get this rate, which is something that I like. If you do add a direct deposit of more than $100 for 3 months, then they will give you an extra $200. And another benefit of this account is that you can access your money at any CIBC ATM across Canada. In summary, I would say that this has a great introductory rate, but it only lasts until October 31st, which I don't like. Again, I don't like these promo rates that are only going to last a certain amount of time, because again, they're trying to get you in, and then they know that you're likely to not leave after that. If you are willing to go above and beyond, a lot of people will, or some people who have a lot of time on their hands will say, okay, for the first 5 months, I'm going to put my money in this account. Once the promo rate ends, I'm going to another account. That is too much work for me personally, but if you're willing to do that, maybe you can consider some of these rates. After October 31st, it's going to drop down to that 0.1%, not the greatest rate. But I do like that you're able to use CIBC services when you do have a Simplii account. Next, we'll go on to Scotiabank. So their account, they have a few accounts, but the one I'm going to focus on is the Momentum Plus Savings account. This account has a 1.8% interest rate, but this is valid till August 31st, and this is a bonus rate. They do have no monthly fees, but they do have $5 debit transactions, which I am not a fan of. I think you should not have to pay to take your money out of your account. They have no free transactions, so it's $5 to take it out. Or you could technically transfer from your savings account to your checking account and then take it out of your checking account. But yeah, I'm not a fan of transactions for my money. Like, why am I paying to take out my own money? They have free e-transfers, which we all love, and there are a lot of rules with this one to get that rate. So that 1.8, as I said, is a bonus rate, and the rates that you get change based on the length of time you hold. So the regular interest rate in this account is 0.05%. And then they have premium period interest rate. So I would say it's up to 1.8%. It is definitely not 1.8% for the majority of people. So depending on how long you keep your money in the account, if it's 90 days, 180 days, 270 days, or 360 days, they're going to give you a different interest rate for all of those. And then they also give you bonus interest rate of 1.2%, which only lasts until August 31st, and it's only on eligible deposit. In summary, I would say this is a great introductory rate, but the bonus only lasts till August 31st, which is like coming up very shortly. What I do like with this account is that they encourage you to save. So because you get more interest the longer you put your money in, it's an incentive for you to save money. My main dislike with this account is that there's so many hoops and hurdles to jump through in order to get this rate. And also that there are $5 transactions. Like, again, I'm not trying to pay a debit transaction to take my money out of my account. It does not make sense to me, but to each their own. Next, we're gonna go on to my favorite account, EQ Bank. So EQ Bank's account is called the Savings Plus account, and they have an interest rate of 1.25%. They have a monthly fee of $0, minimum balance of $0, maximum balance of $200,000, and e-transfers are completely free. And get this, there are no weird rules that you need to take in order to get this rate. That 1.25% is not a bonus rate, it is a standard rate, and that is higher than pretty much every other bank that I've seen so far. All the other banks that I mentioned, their rates are about 0.1% or 0.5%, their actual rate, but then right now they have bonus rates. But EQ's is 1.25 and it's not a bonus rate, it's here to stay. So we love to see it. The summary for this EQ Bank account, I would say that it is one of the highest interest rates on the market right now. There are no fees across the board, and I like that there are no rules or hoops that you have to jump through in order to qualify for this rate. And I like that it is also very simple and easy to sign up for EQ Bank. I signed up last year, as I mentioned earlier, and I've been using them ever since. They also send out monthly emails saying this is how much interest that you have accrued in your account, which I always love to see. Another thing that I like is that once you make your account using the link in my description box, then once you open your account, you can then refer people and get $20 every time that you refer somebody and they open an account. So if you open your account with my link, you go to you make an account, you deposit your money, and then you're like, oh, I really like this, let me share it with a friend. You will get $20 and they will get $20. So it's a win-win. Next, let's go on to CIBC. CIBC's account is called the eAdventage savings account, and there's an interest rate of 1.25%. However, this is a bonus rate again. The 1.2% lasts for 120 days, and then the 0.05 is the normal rate that you will get after the 120 days. So there's no monthly fee, no minimum balance, and there was no listed maximum balance. However, there's an e-transfer fee of $1.50. Not a fan of that. I don't like that you have to pay for e-transfers. And there's also a fee per transaction. So again, you pay for a debit to your account, $5 per debit to your account. Not a fan of that as well, but there are no rules to get this rate, which is a good thing. My summary of this account would be this is a decent account, but it is another temporary rate, and there are no transactions available for free, which I do not like. So I think you are better off using one of the other accounts that I've mentioned earlier. Next, we have RBC. So RBC's account is called the High Interest eSavings account, and their interest rate is 1% for 3 months, but then it drops all the way down to 0.05%, which is nothing. Or you can open advertised direct with RBC, and then they'll give you 1.5% for 3 months, but then again, it drops down to that 0.05%. There is no monthly fee, there is no minimum balance, there is a maximum balance of $1 million, and e-transfers are free with this account. So they do have one free transaction, so you can do a debit on your account for free only once, but then after that every transaction is $5 per transaction. And then they also have $1 e-transfer, so you will pay $1 per e-transfer that you do. Not a fan of paying for e-transfers or debits to your account. My summary would be like, again, a decent rate. They want to get you looped into their other products like advertised direct, so it will incentivize you to stay even past that introductory period. It's a decent rate. Next, we have the BMO Savings Builder account. With this account, we have an interest rate of 0.35%. The 0.05 is the base rate that they give you, but then there's a 0.3% bonus if you deposit $200 monthly. So every time you deposit $200 into an account, they're going to give you a bonus rate of 0.3%. There is a monthly fee of $0. There is a minimum balance of $0, and I did not see any listed maximum balance for this account. There is one free transfer out of this account, but then you pay $5 for your withdrawals or any additional transfers outside of this account. And if you want to get that bonus rate of the 0.3%, you you just have to pay deposit that $200 into your account, as I mentioned earlier. So my summary for this account would be, it's very similar to the Scotiabank account, where they're incentivizing you to save money, which is always good, by giving you a bonus every time you save money. So I like that the bonus is not tied to a certain period of time. It's dependent on how much you actually deposit into your account. It's good for encouraging you to save your money, so that's one of the perks of it. Next we have TD Bank, and this is an account that I used to have, and after my last video I did close this account because I realized I was not getting any interest on my accounts. So I'm going to go through them. TD currently has two accounts, the high interest savings account and then the e-premium savings account. With the high interest savings account, you get an interest rate of 0.05%. There is no bonus rate, there is no special incentive to save, it's just 0.05%. And get this, you only get the 0.05% if you have $5,000 or more in the account. Personally, I really don't keep more than $5,000 in any account because I think you can do better in the stock market. So I literally was getting zero in interest when I had my money in that account. And I think that the bank is able to do this because they have such an established market that they realize that like people are gonna make accounts with us regardless, so might as well give them as little as possible. No one's gonna complain. Most people aren't gonna move their money, so we're gonna keep it there. I am one of those people who was like, no, I am moving my money, but I know that the majority of people probably won't. Another thing is they have 0 monthly fees. However, if you want no transaction fees on your account, then you have to pay $25,000. You have to have $25,000 in the account. So that means that the minimum balance is $0, but if you want no transaction fees, the minimum balance is $25,000. And then there's no listed maximum balance. Transaction fees are $5 unless you have that $25,000 in the account. So I think this is for the rich people. This account is for the rich people. And then with the e-premium savings account, the interest rate is 0.1%. So it's slightly better than the 0.05% that you get with the other account. However, you only get this rate if you have $10,000 in the account. Again, something that people do not tell you. No one told me when I opened my account, but if you have less than $10,000, you're getting nothing actually. There's a monthly fee of $0. I couldn't find a minimum balance. The maximum balance was not listed. But then transaction fees were $5, like if you want to do a debit from your account. And if, again, the rule to get this rate is you have to have $10,000 in the account. Most people do not have $10,000 that they just have laying around, and even if they do, 0.1% is still not a lot on $10,000. Like, I think there are other options that may be better for you. But here, I'm not here to sway your choices, I'm just here to give you the facts. So my summary of these accounts would be that TD is not really providing very competitive rates, and you only get these rates if you have a certain amount in the account, which none of the other accounts have done so far. This is the only account that says, okay, you need to have this much money in the account in order to get this rate. All the other ones, from $0, you start getting accounts. So, and they also charge for transaction fees. So personally, I'm not really the biggest fan of this account. So those are all the banks that I am going to review today. That was quite a lot to digest and to handle. Let me know if you like these videos. I can compare credit cards, I compare different accounts. So just let me know which one you actually want to see. And let me know if I missed your bank. Overall, I think there are so many great options that are available, but I would be wary of the banks that lure you in with this interest rates that they offer you, but it's only a bonus interest rate. Remember, if there's somewhere that's going to give you a consistent interest rate across the board, it's not a bonus, there are no rules to get it, I probably would go with that one, simply because in the long term you will make more money. But again, it's all up to you. As you can tell, I'm still a huge fan of EQ Bank, even from last year, and they, even with the drops in interest rates, they're still one of the best ones in the game. They have one of the highest interest rates across the board. So if you are going to open an account, once again, I would implore you to use the link in my description box because it does help my channel grow. Thank you all for watching. I appreciate you for taking your time to watch this video. Please let me know what you want to see next because I love making videos that you actually want to see. Thank you so much for watching. Bye!